there are three big forces that have been at work, and I think you have to understand those. First is the debt money thing. How much debt and money, and what are the repercussions? How does that pass through the economy? What does that mean for markets, inflation, and so on? We're in a different era now. Zero interest rates, produce a lot of debt and monetize it. Second influence, the conflict, internal conflict over wealth, left-right conflict, that conflict. And then the third is the rising of a great power in the form of China, challenging an existing great power and challenging the existing world order. Those three things are coming together at the same time as then we have a pandemic. So I think each one of those is a cycle. What's happening now has not happened before in our lifetimes, but has happened in the 1930 to 45 period. I went back and studied it over.
And guys, I don't want to let him go on forever. But what he's saying right here is actually very critical. I've told you guys this a couple of times before, but Ray Dalio is a very influential, very wealthy individual. And the reason I like to cover him on the channel so often is because he is very outspoken about things, and generally speaking, we're not exactly on the same line, but he has some sort of opinion that I can really value basically or appreciate because he's not holding back. He's telling you the facts about the world economy with a little bit of a heavy opinion next to it, which again, you got to kind of look past. But at the end of the day, he is telling you the situation right now. And you might say, well, but he's biased. You know, he's definitely got some sort of incentive to say this or that. So does anybody in this world out there. So look past that, see exactly what he's telling, then evaluate for yourself whether or not you think he's spilling the truth. But the words he is portraying in this little talk right here for about a minute are also the core values of exactly what's controlling everything right now. And this is a talk not from today. It's from a little while ago. But I've watched Ray Dalio speak, and even this entire video, I'm not sure exactly how minutes long it is. I can quickly check for y'all. This one is about 18 minutes. In this 18 minutes, he just spits more facts than the majority of billionaires I've watched over the last decades. So just quickly letting you guys know, this man, I really appreciate whatever he preaches out there. Now, one of the interesting things that he's been sharing out right now is billionaire investor Ray Dalio warns the easy money era is over and says the crypto craze is overblown. Now, as I said just now, I agree with a lot of his stuff. He is biased, and I don't always agree with him. Here's one of the things which I don't agree with, but he's warning everybody. Ray Dalio discussed the stock market correction, crypto risks, and the dangers of holding cash. The investor warned the days of easy money, loose monetary policy, and low inflation are over. Dalio said the crypto is vulnerable, trackable, gets too much attention, and likely faces bans. Now guys, if you appreciate the videos I make on this channel, make sure you press that like button. In no way, shape, or form am I trying to FUD. All I'm trying to do is provide news that I think is valuable to people, that you can do something with, and that prepares you for whatever scenario happens in the crypto markets. If that does not deserve your like, let me know down below how I can make these videos better so that you enjoy to watch them. So just put down below, even if it's harsh, if you want to crack everything about my character open, just put it down below. I read every single comment and I try to make these videos as enjoyable to watch as possible. So, all right, so what he's been saying over in this article, basically, what was said about him, is he warned investors that the days of easy money are over. Now, this is something I shared with you guys a couple of times. That is, in times of negativity or bear market, whatever you want to call it, we don't go for the coins which have the craziest potential to spike. We go for the coins that have the craziest potential to remain valuable if things are going down and have a good potential to become even more valuable when going up. Basically, the neutral coins, which are mostly fundamental based and not really hypey, because those do fall significantly in really crazy bear markets. Now, apparently, he blamed the recent stock market downturn on the Federal Reserve plan to curb inflation by hiking interest rates this year. Higher interest rates makes borrowing more expensive, and we talked about this a couple of times, and reduce the present value of future cash flows. And obviously, guys, as a very big hedge fund guy, the ability to borrow money for a lot of the things which they're investing in is critical. And so if that goes away or becomes more expensive, that's of course very negative for them. And so for them to portray the future as very negative, it's kind of like to set yourself in and say, oh, I'm going to do negative, so everybody's doing negative. But again, we shouldn't forget that he actually does own crypto. Like, for example, he says here that his portfolio has a small part of it on crypto. He, however, says that there are vulnerable, trackable, will probably be banned by governments, at least a couple of them. Which again, there's some truth behind that. China banned it already. There could be a couple others that do the same thing. Again, not every government is going to ban it. That's a fact. But some most likely will, and that's the truth. It is also vulnerable to some degree because there are ways to shut it down. Everything in this world is vulnerable, so I'm not exactly sure why I'd have to put it out there. Trackable, it's a good thing. So he also says there's too much attention spent on crypto. As I've said before, there's definitely not too much attention. It's too much wrong attention, but the attention that it's getting is actually too little for how good it is. In my own opinion, crypto will be the standard. So within 10 years, 90% of the world will know about crypto. Right now, it's still a pretty low number if you actually look at the data, which is very hard to find. So I'm using interpretive data, so to speak. So I'm using some data points that some people have collected, and I'm making my own conclusions out of it. It's pretty hard to get actual numbers on how many people know about crypto, for example, because how are you going to measure that, right? It's even hard to assume. It's very hard to do that. Now, having said that, so what they usually do about that is they go for surveys, but again, it's so difficult to go for a proper survey. Like, how are you going to factor in the people that live in, for example, some stranger parts of, for example, China, or some people that are on islands, for example? You're not going to survey them specifically, or some people that don't have a phone. You're not going to go and walk up to them and say, hey, here's a survey. You're not going to go to the craziest parts of the world. They usually do a survey somewhere in the US in a very well-populated area with a lot of Facebook moms, so to speak. And a lot of them know about crypto, but it's usually not really representative of the entire population, which I've described before, right? Where you get false statistics, basically. It's easy to lie with statistics, but it's a different story for a different day. Now, what is in here, what I think is rather important, is the fact that he's basically warning people about cash, partially. The most important thing you could do is not to be in cash, he said, highlighting the threats of inflation and taxes, particularly now when there's negative real rates. He's basically saying crypto, for example, it's scary. Stocks, as of this point, are kind of scary because the Fed is messing it up. Cash is scary. Things are scary right now. Look for something. At the end of the day, it's hard to say exactly where he's turning you towards. I mean, he says he has some crypto. He's also saying it has too much attention, though. Then again, he is very outspoken about things. I just wanted to make clear, he's a very well-worth man, or a very wealthy individual. He knows his way around the markets. He is a crypto investor, so he knows there is some appeal to it. And he's just given an honest opinion out there, at least as far as I'm concerned. It is pretty honest and pretty brutal. But it is something that you indeed should keep in the back of your head. Right now, things are really in a point where you got to be careful with anything. You know, there's really not any good investment opportunity out there at all. Cash is the risk of devaluation due to inflation, mostly, which again is going to basically be messed up by the interest rate hikes, which again are bad for stocks. So that's also not the safest option, which again, in turn, with the correlation that we have right now, could take down Bitcoin. But also in a different sense, we also have the banning and whatnot threats. So all these three sectors are, theoretically speaking, unsafe. Gold is the best alternative? I don't think so, because it has the least potential to go up. But in terms of value keeping, it is one thing that potentially might do well. But then again, it's always vulnerable because if one big pocket of gold gets found, there goes your entire plan. So it's just a little warning for people out there. As at this point, crypto is doing good. I'm sticking to crypto, I'm still holding on, but it's good to get a perspective of everything, you know, to put into perspective that indeed there are some risks to everything. And even though we know the risks, then we can still choose to consciously invest into it because we appreciate the risk, we understand it, and the risk to reward looks better for us in the sense that we appreciate whatever can happen to Bitcoin in a negative sense or crypto, but we think the upside is higher or better at least. So that's what we go for it. All right, topic number 2. The SEC introduces a Trojan horse crypto regulation as the price of Bitcoin, Ether, BNB, Solana, Cardano, XRP rebounds. Okay. Meanwhile, SEC watchdogs are plotting to ambush crypto with a Trojan horse regulation, which is why I'm telling you guys, I am staying ridiculously bullish on this technology, but there is some underlying threat that we have to consider. Last week, the SEC introduced a seemingly unrelated 654-page plan aimed at regulating treasury markets platforms. Pro-crypto Commissioner Hester Peirce, however, warns it's a sweeping crypto regulation in disguise. While the proposal doesn't mention crypto, its new rules would let regulators probe into crypto platforms and even decentralized finance protocols. To be honest with you guys, I'm getting really heavily into DeFi. I've been doing that for months, to be honest with you, but the last couple of days, I'm taking some very big steps into it with some very serious cash. I've also been shifting some of that money because of some newer risks that have come into our space. And I'm sharing that story over on Patreon. Generally speaking, I wouldn't say join the Patreon if you don't really have to. But the whole DeFi experience, until I'm doing a series here over on YouTube explaining everything, I'm most likely going to stick to Patreon only for giving my DeFi updates. So just letting you guys know about that. To kind of go to topic number 3, some interesting things happened. First of all, Manchester United, very big partnership. $27 million deal with Tezos, or Tezos. As a result, the club will put the latter's logo on the trading apparel. And I can't say anything else except for wow, right? Huge. We first heard that we had out there the Polka Dot partnership with FC Barcelona. Now Manchester United working with Tezos, or Tezos. Very nice. Last summer, the club's legend Cristiano Ronaldo re-signed the Red Devils after spending many years of his career at Juventus and Real Madrid. According to many, Portuguese superstar is a driving factor in striking a commercial deal like the one with Tezos, or Tezos. How do you guys pronounce that one? Let me know down below. Very interesting, though, guys. Very, very interesting. I remember Tezos was doing some good stuff a couple months ago. Yeah, British F1 team McLaren Racing. They launched an NFT or something of the sort. I don't really know too much about the insides of that, but very interesting. And then some other juicy news. Apparently, Nintendo getting into NFTs, Ferrari getting into NFTs, Lamborghini getting into NFTs, Nike getting into NFTs. Well, actually, they were into NFTs before. Right now, they're just suing somebody over NFTs. Kind of fun. The sportswear giant has accused StockX of free riding on ILP, intellectual property. Nike has filed a lawsuit against the sneaker marketplace StockX. The filing alleges the StockX vault system is free. Yeah, okay, I was just making sure here that they're talking about sneaker NFTs, right? Huh, okay, so just to quickly make sure, I was like, is it just ILP only? The filing alleges the StockX vault system is free riding on the back of its trademarks and intellectual property. StockX has not yet commented on Nike's lawsuit, citing a policy against public statements on pending litigation. I understand that. Now, Nike is suing the sneaker reselling platform StockX over NFTs of Nike footwear sold to StockX customers. The suit alleges that StockX is free riding on the back of Nike's trademark and associated goodwill. Nike is defending for their counterfeit NFTs and whatever, which is funny, right? Because we talked before about how there's a very pending issue of copyright in the NFT space. As at the end of the day, it's very hard to say how NFTs work in terms of copyright, because you could kind of see it as the same sense of selling a picture. But then again, it's also not like selling a picture because it's a piece of property, really, and it's a non-fungible token, but it's something on the block. Then again, there's not really been any rules for a token. It's a digital piece of something, which is not a picture. It's hard to say whether or not it falls under ILP, because it's literally something that's completely public out there, basically, and anybody can create the specific thing. And it just depends on whether or not they're selling and giving away a picture of something or not. Because at the end of the day, what I sometimes see it as well is if they, for example, right, this is like a very big issue in the ILP world. If, for example, right, I get a shoe right now in my home, I make a picture of that shoe and post it to the internet. It's fine. Can I sell the picture though? Yes, but no. Yes, but no. It depends. It depends a little bit on how things came about. Theoretically speaking, yes, because it's your picture. However, it is of a good that falls under some specific guidelines. And then it makes things a little bit more difficult because you can really not market with that specific thing depending on how things go. Very often you can get away with it though, but sometimes make things difficult because in theory, if they, for example, made something to resemble the shoe in an NFT, like for example, draw it, there's a very thin line between where exactly the intellectual property lies, because in theory, they made this specific art of their own. And in theory, yet again, there's no rules about them recreating this specific thing on the blockchain that has, in a literal sense, nothing to do with Nike, that does resemble Nike, but in a digital fashion on something specifically, because again, it's an NFT, not a picture, not anything that we've conceptualized before, that Nike, theoretically speaking, doesn't have rights over, because again, this whole goods section has not really been created before. So it's a completely new thing of digitized goods, right? Because again, we're in the same sense as the picture of the specific Nike being so. I mean, you guys understand where I'm coming from with the whole theory being kind of difficult. But apparently, if it's just Nike's trademark, let's say, for example, they're using the logo and stuff like that, well, again, that makes things a little bit different yet again. Do I care about this? Yes, very much so. Because at the end of the day, whatever's going to happen to this lawsuit could have the biggest effects on how we regulate NFTs and what the intellectual property was going to look like. Then again, at the end of the day, there's so many freaking loopholes with that I'm thinking it's going to be a really long ride. So this lawsuit could take 5 years, you know? in reality, with the way that crypto is right now. It's just so infancy stages. Then again, more and more of these guys are getting into NFTs. It's just a fundamental still, though. Eventually, NFTs will be everywhere, if you were to ask me. All right, guys, but that was it for today's video. Hopefully, you all enjoyed it. If you did, make sure you press the like button and subscribe to the channel. If you didn't enjoy it, then let me know down below why not, so I can hopefully make these videos a little bit better.